So, in the initial years, when I started, it so happened that sometimes I feel that how this price has immediately reversed. Like if I have taken a long call and I'm expecting a price to move up, right? It is going good for a few minutes, for a few hours, maybe, and suddenly the price reverses for no reason.
Mm.
So I thought that there was something which I was missing,
Okay.
to identify whether the move will continue or not. Then I deep dived and I came across this options open interest idea, right?
Okay.
So then I realized that options, if I add this options open interest to my the armory to identifying the trend or to uh, see whether the move will continue or not, this will improve, and this definitely improved. So initial stages before strike, I was basically relying on my day end excels, creating all the hypothetical, downloading all data into excels, analyzing the data for the next day trades and all that stuff. But once the strike was launched in 2 years back, so my spending time on data crunching has reduced, because now
Okay.
I can analyze the data in few minutes, even during live trading hours. Strike helps me to identify the trade within few minutes,
Okay.
which was earlier not possible for me. So primarily the tool of options open interest has improved my options trading a
Okay.
lot.
Okay, sure. So we will be kickstarting the webinar. Also, I would like all the viewers to take notes of this. If you have any doubts or anything, just drop or jot down the question over there, because once Mohit sir is completed with the training or whatever discussion, we will be taking up live Q&A as well. Okay, so that time we will be allowing you to unmute. You can just have a you can get your doubts clarified from Mohit sir. Okay? Okay, Mohit sir, will you be taking over now?
Yeah, sure. I'll be taking
Okay,
over now.
sure, sure. Okay,
Right.
thank you.
Thank you. So, to start with, we all know that market system is governed by forces of demand and supply, right? If a buyer comes, there is demand in the stock, then only the price will move. If there is no demand, the supply is higher, the price will move down, right? Now, this demand and supply we can identify based on open interest as well. I'll share my screen, right?
Yeah, you can share, you can share.
Okay. So you guys can see, right? You can see. So what is open interest? Basically, when a contract is traded, right? Say a put is sold and the same put is bought by a buyer. One contract is traded, so we say that one open interest has added. Once these trades get stacked one over the another during a period of time for that particular expiry, the open interest gets generated. So when if you see these charts, this screen, the put is 20 is red bars and the call is open interest is on green bars, right? Now, how do we say that these open interest bars are sign of demand and supply? When a put is written, the seller of the put expects the price to go higher or stay. It Hello, am I audible? I
Yes, yes, you are audible, sir. You are audible.
I think there was some error. Sorry, no problem. So we were right. Okay, so when a put is written, the seller of the put expects the price to go higher. It does not expect the price to go below the strike price which he or she has written. That means there is demand. Why? Because if the price expires below that strike price, the put writer is ready to accept the delivery of the stock. We are talking about the investors or the non-speculators here, right? So whenever a cash secured put is written, the put writer, if the price goes below the strike price, he is ready to accept that. So that means he wants the stock at his demanded price. Same way, the CE writer is ready to give delivery of the stock if the strike at which he has written the call is crossed. So both of them want to either to take the delivery or give the delivery of the stock at their predetermined prices. By this nature of their trades setups, they are creating a wall in the system. Wall in the sense they are creating the put writers are creating support for the price, because as uh, more and more traders join the first one at the same strike price, the support becomes strong. As more and more CE writers join at the same strike price, the supply is coming at that strike. So we say that the resistance is being created. The, so the price has to break either the resistance or the support for anyone, any of the party to actually take the delivery or give the delivery of the stock, right? Like for example, in this Nifty's open interest chart, we see put writing at 24 5,000, 25,100, 25,200, and call writing from 25,300, 25,500. Now you are seeing different level of bars. That means there is different level of open interest at each of the strike price. Higher the open interest, more strong the support or the resistance is. So by looking at this table or the chart, we can safely assume that as of now, as of today, as of close of Friday's trading session, 25,000 is where there is highest open interest in the put. So 25,000 is the current support level for Nifty, and 25,500 is the current resistance level, because that strike is the highest open interest in call options. And if you see, I am seeing the combined open interest of all options being traded, right? Of all expiries. If I unclick this, the data may change based on only the current expiry, which is 23rd of September. See, I unclicked and the data changed. So for this current expiry, the highest open interest input is 25,300, and the highest open interest in call is 25,400. So these are the two boundaries beyond which, if the price goes, those put writers or the call writers will start feeling the pain and may try to cover, right? So this is how our options open interest gives us a range within which the price may actually trade during the whole expiry period, which is month for us. Since we are talking about only the stock options today, so for during the month of September, say because we are in the month of September, our expiry is on 30th September. For if I have seen is on the first day of the new expiry, which was on 29th of August, and how the price has moved, the price range defined by these open interest bars, the highest open interest bars, was more or less adhered to by the price movement. But this does not guarantee that the price will not move beyond this, because movement of price is always based on many factors, right? This is just one data point which helps me to identify that, okay, if the price has moved from say 250 to 252, whether it will cross 255 or not, uh, uh, or I should say whether there is probability of it crossing 255 or not, or whether there is probability of it falling again back below 250. That probability I gauge through this open interest graphs, right? Now, there are more than 200, 250 stocks. I cannot go for each stock page to identify. One tool which helps us in identifying, in presenting the summary of where the maximum open interest in puts and where the maximum open interest in calls is there, is our strike OI insights. Okay, we will start from the, so this is the status of each of the stock as on 1st of September 2025 with combined open interest for all the expiries in which are open for trading for those stocks. Some stocks may have liquidity only in current month expiry. Some stocks may have liquidity in the far month as well. So every month, wherever their trade has been done, because I have clicked on the combined open interest, this summary page will present me the summarized form. Now we'll understand the contents of this page. So basically, symbol future price, percentage change is your change in price, right? Interpretation is one column which is critical for my decision making. So we'll come it at the later part. First, I'll explain this. This is the highest OI. Highest OI C strike. So the strike price of ABB, where there was highest open interest on 1st of September, was 5500. So that means 5500 was my resistance level for ABB as per options open interest. And the highest open interest in put strike was at 5000. So my support was at 5000. So my range for ABB as on 1st September. See, this data keeps on changing with the change in price, with the change in trades being executed by options traders. This data on 2nd September will change, right? Whether this range will change or not depends on the price movement, because ultimately what defines the market is the movement in price of the stock. These are just tools to identify whether the stock price may remain in range bound or may break out or break down, or is there a probability of a reversal in the stock price. So these are just tools to identify the probability. What will happen, we will see when the actual price movement will come. So highest open interest this, and with the change in open interest. So that means since this we are seeing it at the end of the day. So on 1st of September there was still change in 5500 call option open interest by 5%, which was a reduction. Minus is a reduction, green plus is a addition in open interest, right? So put open interest increased while the call open interest reduced of that highest open interest strike price. Now it may so happen that on previous day the highest call highest strike was different, and due to large trading in some other strike, that during the trading hours that day the strike price has changed, because this data is at 1 minute snapshot data, right, which is as good as your real time data. Second section is your highest OI addition. This is simply wherever the open interest has added significantly in percentage terms in whichever strike it is, whether it is of the highest of OI or not. Same way, the third section is your highest liquidation. For both, these are both puts and calls, right? In any strike where there is highest liquidation, so 5,000 call strike had 11% liquidation in ABB, which was highest for 1st of September, right? Same way, 4,800 put open interest reduced by 22%. That was highest reduction of any strike price on 1st of September. Now we come to the interpretation. You will find there are 5 interpretation: below support, neutral, near resistance, above resistance, near support. As I said that puts open interest acts as a support. So any stock whose future price is trading below my highest put open interest will be tagged as below support, right? Same way, any future price which is trading above highest open interest call strike will be tagged as above resistance. Near resistance and near support are when the prices are within 1.5% of the strikes. So basically, when the future price is within 1.5% of the put strike price, it will be tagged as near support. And if the future price is within 1.5% of the call strike price, it will be tagged as near resistance. So when near support means the put strike is below the current trading price, but the trading price is within 1.5% of that strike. Okay, and this interpretation is related to the highest OI strikes only. No other strike is being considered. And the last one is neutral, when the price is beyond 1.5% range, but somewhere in between the strikes, both the strikes, call and put. Now, this interpretation helps me to identify whether I'll go for a long option trades, that is the option buying trade, or whether I should focus on short option trade, that is option selling trades. Uh, if I have to do standalone basis this screen, I will safely say that anything which is trading above resistance or below support will trigger my choice of long option trade. I will look to buy calls for above resistance. I look to buy puts for below support. Right? When there are other conditions, we'll come to that when we formulate a proper trading plan for this. And when the price is neutral, that is when I look for a short option trades. I look for a option selling trades in that particular stock. Right? I hope everybody has understood this screen clearly. If you still have doubt, we'll take it up during Q&A. So this was all about strike OI insights and what basic idea this gives us. Now, second part of this is, as I said, the actual price movement, right, will define my final entry exit level for an option trade, right? Now, for that, I use an indicator. There are tons of indicators, you can use any, but my preference is always for the one indicator, which is Bollinger Bands. I'll just hide the bars first price. So Bollinger Band is nothing but standard deviation bands when the price moves around a moving average. Your standard settings in any software will be 20 period moving average and two standard deviation bands. So basically your red line is two standard deviation above 20 period moving average, which is your orange line, right? And your green line is two standard deviation below the orange line, 20 period moving average. Now, why I use this? This band has a typical tendency of contraction and expansion. See here, there is a contraction in the bands, right? There is an expansion in the bands. What this contraction and expansion signifies is that when the bands are contracting, it means that price is consolidating, right? As you all know, 80% of the time, volatility or IVs are in contracting mode. Yeah, any options trader will know that, right? And 20% of the time it will actually generate 80% of your profits, 80% of the moves in any stock price, right? So now, how do I identify whether there will be contracting or whether the volatility will contract or not? This Bollinger Bands helps me. When the price volatility starts going down, bands contract. When the volatility starts to expand, band starts to expand, and it reaches at a point from where the mean reversion again kicks in. That is from where again the band starts contracting, right? Now, if I am an option buyer, I will look to buy. I will be interested more in this expansion mode because I want early entry, I want quick and momentum. Option buyer will make money only 33% of the time. Probability of making money for option buyer is 33%, and probability of making money for option seller is 67%, right? And for option buyer to make money in the market, we need momentum on our side. Momentum will come only when there is expansion in volatility. Momentum will not come when the bands are contracting, when the volatility is going down. If I buy option in this range, this is hourly chart. In 5 hours, the premium will erode significantly depending on at what period, at what time of expiry I am in, right? And if I buy option in this period, there is a probability that price continue to move higher or lower in this case, or lower at a speed which will generate return for me as an option buyer. So my option, so we are set with two things. If I am looking at option selling, for option selling, I want neutral in strike OI insights, because if the price is above resistance or below support, then there is a probability that it will continue and it might pick up pace. And my option selling, if I am a uh, what non-directional trader, right? If I have deployed a short strangle or a short iron condor kind of trade, I will end up in pain. And second thing I'm looking at is bands contracting, right? And option buying, I want bands expansion. and either above resistance or below support with additional info. What is that info? Okay, I'll have to keep it somewhere in paint. Okay. So what is that info we need? The additional info we need is reduction in open interest of the highest OI strike. If the price is above resistance, I would like to see open interest reduction in the call strike. If the indicator is at below support, I would like to see open interest reduction in put strike. That gives me a confidence that there is a probability of momentum continuing on the upside or the downside. So I would prefer a option buying trade there. It's not mandatory to have an option buying trade. You can have an option selling trade as well, as a directional trade. We'll come to that. I'll show you how I trade a few option selling also with this condition. Now the question arises: open interest, change in open interest above resistance. That for that I have strike OI insights, right? But for where do I get the information about bands expanding or bands contracting? For that, Strike has a scanner. If we go to scanners, we go to technical scanners, we go to Bollinger bands. There we have these four scanners: early bands winding, early bands tightening, price crossing above lower band, price crossing below upper band. Right? Early band winding is where we are seeing the expansion. Right? This was daily. Time frame is daily. The option for time frame is hourly, daily, weekly, monthly. For but being an option trader, I'll not go beyond daily time frame, and we will use different time frames for option buying setup and different time frame for option selling setup, because in option selling I'm not kind of intraday trader. I look to do option selling on a positional basis, at least 4 to 5 days, if not more. Right? On 12th of September, on daily time frame, early band widening signal came. So since this is daily, this is at the end of the day, the signal came in these number of stocks. So 12th was here. This was 12th. And incidentally in this stock, if I see, तो ये आज भी same expansion mode में होगा. Yes. And this is a early band widening. Then we have similarly early band tightening signal. So we have this on 12th of September, the band was tightening here. See, this was a tightening of range accompanied by tightening of range in the lower. Right? One important thing, please note, we are looking at tightening of bands from both directions. Right? We are not looking at something like this. if we are early band tightening की बात कर रहे हैं और band tightening, this kind of structure means there is strength in the trend, what we call a band walking, right? The price may continue to walk the band, right? See here in this section itself, price is just moving, just dips in, again moves out, just dips in, again moves out, till this period, till it touches here. So this part is what we call a band walking, when it does not mean revert. Mean revert means it does not come, the price does not come back to the moving average based which we have set the Bollinger Band settings. Okay, this is strength in trend. So we are, therefore we are looking at contracting from both sides, right? So these are the two things which we combine together: bands tightening and strike OI insights indicator, bands widening and strike OI insights indicator, to place a trade for option buying and option selling. So let's first we'll come to option selling trades. How do we plan our trade? For option selling trade, what I do, you can do as per your own convenience, as per your own setup. What I see is bands contracting, as I told you, right? First of all, I am a positional trader, so a daily time frame. Bands contracting and interpretation as neutral. Why neutral? Because I want to place, if I want to place, this is option selling for a non-directional trade, mind you, not a directional trade, because I will be non-directional trade like short strangle or a short iron condor. So I'll be short. My primary will be a credit. I'll be looking at credit from both sides. So I want price to spend as much as time within that range. I want the price to not go beyond my comfort level, where I have to either adjust my trade, option selling trade, or I had to take a hard stop, right? So I use at 3:15 p.m. At 3:15 p.m. I come to this scanner, early band tightening daily time frame. I identify uh, the stock where I am comfortable with, because not every stock you would like to trade. There is always some bias, some view within you about that particular stock, to go up or not. Second thing I am looking at is the bands have already widened before, right? I am not looking at something where the bands are already tight and still there is contraction, some more contraction. So I am not looking at something in this range, right? Because there is a possibility that the price may fluctuate and then give a directional move. I am looking at a price move in one direction before I take a short strangle or a option non-directional trade. So I'm looking at a price movement to happen before. I am seeing a band contracting on daily chart, right? Like there. And then I place, then I see, second thing I see is what is my strike OI insights interpretation at that point of time. Like this, I on actually 12th is already there, right? Sorry, I took a snapshot for 12th. 12th is already there. This was 12th. These are the tightening signals. So based on these two things, bands contracting and neutral interpretation, I on 12th I identified two stocks. One was Bank of Baroda and the other was Colgate Palmolive, right? So this was my identification on 12th of September. The contraction, let us see, it was there, right? It was there. Yes, Colgate Palmolive was there on 12th of September signal, 3:15. And as per Strike OI Insights on 12th of September, so the highest OI was at 2500 and 2300. My band range was 2200 and 2500. So it is well within my comfort range. So I placed a short strangle or an iron condor either on 2300 and 2500 depending on what you feel. But since I give more weightage to uh, price when especially when I'm selling options. So I placed an trade for 2200 and 2500 short strangle. Let us see what happened to that trade. On 12th of September at 320, right? 315, 320. So 2500 call was trading at 8 and 2200 put was trading at 4.7. So 12.7 is what I got. And what was on 19th? First of all, let us look at the chart. On 19th, it was 2500 call was 4.2. So basically, what 50% reduction, 2200 was 3, 5, 40% reduction, right? Because the price from 12th whole last week was trading in this range. Now, how to handle these trades? See, I prefer a hard stop. People do adjustment and all that because not all stocks will do what you want it to do, right? There may be cases where the price may move out beyond your shorted strikes, right? So what I do is I book profit when I have earned 70 to 80% of the premium, initial credit premium, and my hard stop is at 40 to 50% of the initial credit premium. I am not too much confident in adjustments, especially short option trades. So this is one type of short option trades, the short strangles or whatever iron corner you do based on strike OI insets and Bollinger Band. Second, I told you we can have a directional trade as well, right? For that, again, we follow daily time frame because of positional nature. But we want a widening signal. Now the difference in see the widening signal daily. Why I am selling options here and not buying options here is this was 12th of September. Bands widened, right? but the price did not move for 5 days, and we were in the third week of expiry. The premium would have, if I had bought calls here, premium would have eroded too much for my comfort. I would have, and price actually moved on 19th, right? So when it comes to daily charts, I prefer short option trades. Same way, this was my trade for on 12th of September for a short option trade. Strike OI insights neutral, right? Range is 1580 to 1480. Bands are expanding. You can see here the TechM is in early band widening signal, right? Bands are expanding. Now, since this is daily, I would place a kind of directional trade. You can do spreads. You can do uh, naked short selling. I prefer ratio spreads, right? So what I did was, since this the nearest was at 1457 swing low, that was my stop loss. So I placed a ratio spread based on my strike OI insights range, where I am selling the highest OI put. What I am expecting is that in next 4 to 5 days, the price may dip. It is 1536. There are no what you call earnings announcement due in next week, right? There is no specific information or data point due other than the Trump, which he keeps on doing every day and night. So I am not expecting to price the price to dip more than 7% on this stock. Why? Because after a long trend, there has the price has been consolidating, and since this is the first expansion, even if the price does not break out above the range, it may stay here rather than breaking down. This was my interpretation of the chart. So I placed a ratio spread where even if the price drops below 1500 till 1480, I would have made money. And my break even point, if you see, is 1454, which is in line with my stop loss on the price chart, right? Again, for this trade, my take profit will be 70%, 70 to 80% in 4 to 5 days, or 50%, 40 to 50% hard stop. Because if the price in one single day, if the next day the price has breaks below 1480, I might be in loss, right? So my hard stop in that case will be 40 to 50% of the premium I earned. Not the earned, the credit. So basically it is, if you see this, I received 4000 as a credit, right? So anything, when the premium on these on this set of trade drops to say 1000 or somewhere there, so there I will book a profit. I will look to book a profit, and if the premium goes beyond 6000, then I'll look to take a hard stop loss, right? So that will be 50%, 2000 will be my loss on this if I book a loss on a 6000 premium. So that ways we do the options selling based on these two, right? Now comes the option buying trade. As I told, for option buy, just a minute. I need some water. Give me a minute, please. Sorry. Yeah, we will continue. For option buying, we need momentum on our side. So, and on daily chart, you have seen in this also, you might see in others also the price in this Stackham also the price stayed there for 2 days, 3 days. This is before, but then the momentum was not much. So I could have lost money if I have bought options. So for buying options, we go down to hourly time frame. Okay. Buying option setup would be OI interpretation above resistance with reduction in OI in double digits. Below support, reduction in PEOI double digit. Hourly time frame, Bollinger Band expansion, early widening, right? So this is my setup for buying options. We are looking at to enter here. This is where the expansion happened. Here after this candle, I'm looking to enter at after this candle, right, on hourly time frame. Provided, since this is going up, so provided my highest OI strike is showing the price is currently above resistance, above highest OI C strike, and there is reduction in the open interest of that particular strike by in double digits. When I say double digits, I am talking about non-index stocks, because index or Nifty stocks, Nifty Sensex stocks, 7 to 8% change in open interest is good enough. It is very difficult to move a stock or move open interest of that stock in such high proportion. More is better, but 7 to 8, it is 7 to 8% reduction. I am comfortable in taking the trade. For non Nifty, non Sensex stocks, I'm looking at something at 13, 14, 15, 20, 25%, whatever may be, in double digits, right? Achha, why I am looking at reduction? Because if the open interest is with this move and my strike is suppose in this stock itself, if the my strike it has highest open interest strike is say 1100, okay, the price has moved here, but instead of reduction in open interest in 1100, there is addition in open interest, right? Then there will definitely be a reaction in the price, big or small, that depends on the other dynamics, right? Like if I show you, this was CG power on 8th of September. 750 was 750 CE was highest OI strike. Price moved on 8th of September from 735 to 750. right? Near resistance पे पहुंच गया. Once 750 is crossed, it will be above resistance, no doubt. But instead of reduction in price, there was addition in open interest. What happened next? These three candles. Price gave a reaction. It was a good reaction, but sometimes the price may only dip till mean. Mean means 20 period moving average. It may consolidate there. Then the open interest starts changing, and then when the price again goes out, and this happened in the same stock on 10th of September. After this initial dip, price again consolidated, and on 10th, in the very first candle, there was expansion in the Bollinger Band. Price touched 750. The future price was above resistance, right? And there was a reduction in open interest. So once this candle is closed, second, my entry will be above the high of this candle. See, this candle is a kind of doji, right? And there is possibility that the price does not go above, because ultimately price movement I have to see. So my entry will be above this, above 750, or if the trend initial stage itself is strong, 750 is my strike price. So 750, 751, 752, if it crosses with a double digit, till now it was only 8%. I would enter, buy a long call, right, and trade this. And that trade would be 10 September. This was the candle, 9:15 candle, proper expansion. See, the bands expanded on both sides in this candle, right? Entry triggered above this candle. At 10:15, let us see what was the reduction, if there was any. So it was very first candle it happened. So this was at 10:16. Okay, 750 strike. There was a reduction of from 13 to 11, more than 20% reduction. Right? Satisfy my criteria. Price is trading above resistance because the close was at 757. Bollinger bands are expanding. Early time frame. There is reduction in open interest of that highest OI strike in double digits. I enter and then I write this. Okay. Now this momentum, as you all know, will not last for long. The price will move, then take some breather, and then move again. Then again take breather, dip, maybe bigger dip, maybe smaller dips, and then again move. Right? I want to enter somewhere here, exit here, or maybe us. I don't want to get stuck in this consolidation range if I am an option buyer. So at the max, when I am entering a trade, my trade plan is very much clear that I will have this price, that this trade open not more than 11-12 bars, right? Not more than 11-12 bars, even if my stop loss is not hit. Now the question is, what will be the stop loss and how I trade this? We will have to trade this based on price chart of options. The option which we want to enter, right? Like in this case it was 757. I look at ATM or the nearest strike, so 760 CA. I open a call which I want to enter. 5 minute chart, no indicator. 10 September. So this is 10 September starting here, right? At 10:15, the price was here. This candle. So my reference point for on the spot price chart was high of the 9:15 candle, early candle. My reference point for this will be high of or some points higher than this, whatever happens, right? So I would most probably get an entry here, because if you would have seen that next candle in spot chart also got there, right? My stop loss would be, if I am too much aggressive, will be here, right? If I am not, then I would prefer a stop loss here, swing low, and then I try to ride. My first take profit will be 1 is to 1.5 or 1 is to 1 is to 2, and if I and then trail the rest based on the spot chart, based on this, whatever I do. So once entry is made, this is so, and if I say, let's say our stop loss was here, so 16.3, 4.5. 4.5 will be 26, right? So this was my first 1.5. If I say 1.5, 4.5 plus 2, 6.7, 29, right? My first will be there, somewhere here. First take profit. And when I take profit, I'll trail my stop loss from here till here, or because the price is, the option price is doing very good consolidation and breakouts. So then when it goes here, I again take some profit out. So that based on your trade plan, right? So it went till 40, then again my stop loss will be here for the balance. If I take after this, first the stop loss will come here, this will come here, then once this second take profit is crossed again, then comes here, and ultimately my profit got, or my stop loss got hit, right? So this is how I trade option buying, both on long mean upside, both on the downside. On downside we are looking at in this case we looked at call open interest. On downside we look at puts open interest. We look at Bollinger Band expansion on the downside, right? Another, if you want to see, this was Vedanta way back in May, right? uh, Another expansion, but on 10th of May, I don't know whether 10th of May will be available. Let us check. Vedanta. We'll take some. Why go so back? Ambuja Cement. This is how I trade. I have saved. This was Ambuja Cement in July month. Expansion. See, the candle was too big, but still, I will only enter after this, because that confirms that my breakout is actually confirmed. The demand is more. Still, demand is still there. Supplier is running away. So in this case, my trade was this 610 call. That was highest to high. right? So this is how, and this is where on 22nd July the target was done. So this is option buying setup. So we have buying option on hourly, selling option on daily. Based on strike OI insights and Bollinger bands. We can also use RMI. If you people are using RMI, RMI is a very good indicator. It's a proprietary indicator of India charts. And but I prefer RMI to use in my short option trades. How I trade? Again, Daily chart, new buy signal, right? New buy signal on RMI at 320, 315. Then I place a, then I look at the price should be above the Bollinger Band. Matlab price should be trading above my means. So RMI will be like this for long trades, right? New buy RMI on daily, price above 20 SMA because we are using standard, right? Strike OI insights either neutral or above resistance. Short option trade. Again, spread, ratio spread, or broken wing butterfly, whatever you are comfortable with. These are 3 4 types of trade options trade I do using strike OI insights.